Ntombenhle, let's start with the global picture as we see it. Another piece of good news from European central banks helping to keep equity markets buoyant for now. ECB is saying that it will provide unlimited 3-month dollar funding to banks from October. This is similar to what they offered during the height of the crisis, also back in May 2010 when we saw Greece's problems first come to the fore. Does this really solve the solvency problem that banks in Europe have?
Absolutely not, and I think that's what a lot of traders are thinking about today. It solves nothing. Really what it's done is that Japan, the central bank in Japan, Britain, in the ECB, United States, as you mentioned, Geithner is going there, as well as the ECB are going to just sit down and talk about how they can provide liquidity for the day-to-day operations of the bank. There seems to be a lot of trust going out in the interbank market there, which is affecting their day-to-day operations. That just really solves, the bank's problems, the commercial banks, but does not solve the fundamental economic problems in that environment or in that in Europe. So what is really it translates to is that these things still need to go on. The ECB needs to step up as lender of last resort, or something needs to be done that's more sustainable to the economic side of things rather than the operations, the day-to-day operations of things. That's what I was trying to say earlier. But I think we saw the futures market this morning opening very, very low. The US futures opening very, very low. Just as a reaction to also the United States data that came out yesterday. It was very disappointing. Initial jobless claims, and that was also very, very much ignored in reaction to the ECB or the European zone, announcement yesterday. But now we saw that filter through to our markets this morning, where we were trading quite low for the morning session. We have come up quite a bit, but it still does not bode well. They've got the meeting later on this afternoon in Poland, where they will be discussing. And look, we're looking for sustainable economic turnaround and sovereign turnaround in that zone.
And perhaps the focus on that economic data out of the United States will be back in the fall next week when we have that meeting of the FOMC. What is the market pricing in? Some saying we're not quite sure whether we will have more quantitative easing from Bernanke at this stage.
No, I don't think the market is expecting that. I think they made it clear the last time that, look, they are looking at the situation. They don't think it's time yet for QE3 or anywhere near QE3. I think there's just it's a wait-and-see game, seeing how things filter in the market. Can there be something done? Also, the European zone, it does affect them. As you mentioned earlier, Chinese crimping their demand because of inflationary pressures there also does affect them. So, it's not just looking at one aspect. There's so many different aspects that the Fed will be looking at next week. But we don't expect any new news of, anything close to QE3. But we do expect to hear some kind of soothing comments out of Ben Bernanke next week.
Of course, all rhetoric, though, until we actually see the real economy start picking up. Let's focus on the local equity market here and stocks that are helping to keep the JSE in positive territory. Gold miners being upgraded by HSBC. We see the likes of Anglo Gold Ashanti trading positively on the back of that news. Do you think they can sustain this positive momentum? And what is your take on the gold stocks?
Well, if you look at the gold stocks are so intricately linked to the gold price. We've seen the gold price retreat quite a bit from its highs that were reached around about mid-August. But you know what, make no mistake, the gold
breaking
price
that trend today, as you said.
Yes, exactly. The gold price is still bid. It's sitting at $17.75, I think, the last time I checked, and it's still $160 higher than the beginning of August when the risk-on trades started happening. So, I beg your pardon, risk-off trades started happening. So, but it's still very much bid, and it just goes to show that maybe the gold stocks have come up a little bit of late. As the equity markets are starting to get a little bit more favor. But we still expect that going forward, the gold price may approach $2,000, because the fundamental economic issues of the sovereigns of the world have not been sorted out.
And of course, inflation fears as well.
Exactly, and gold still remains, a safe haven status, and we expect that people will come back. So I think we saw that gold was quite positive today, or the gold miners were positive today, despite the fact that the gold price had come back a little bit, because bargain hunters were getting involved there, knowing that actually the game is not over just yet.
Rebalancing of the indices today. Woolies being added to the top 40. Which stock coming off?
Rainet is coming off. Yes, Woolies being added in there. Very, very, very nice day for Woolies today. As you mentioned earlier, also, you know, they've been added to the Dow Jones Sustainability Index, which is very good showing. But I might just add also that South Africa's also got their green index, aptly named the Nedbank Green Index. So we're involved in that green.
When is that being added?
That's launched already.
Okay.
We have launched that, the Nedbank Green Index, yes. And Woolworths, as well as Sasol, you mentioned earlier, are part of that index. You know, Woolworths is obviously one of the top constituents in that index, and is doing very well. Sasol a little bit more controversial, but you know, we do believe they merit to be on the index because of their aggressive targeting in the carbon footprint, you know. So, you know, we're not surprised at all that this has happened, but it's a very good day for South Africa to be represented in the Dow Jones Sustainability Index.
Good day for South Africa tomorrow with the rugby. Do you think that the rugby fever could spur any positive sentiment in the market today? Do you think we'll be able to manage the positive momentum and keep it going till the rest of the day?
Sure. Well, you know what? If the market goes up, regardless of what happens in the market, I'm just praying for the Booker tomorrow. You know, for a sustained, for a bigger margin than the last time, guys. They can do it. You know, so I just hope that it just works out. But they will definitely be in my prayers, and we support them regardless.